first, let's talk about what's going on the earnings front here. We heard from Intel after the close yesterday. The new CEO, Pat Gelsinger, of course, had already revealed his plan to turn Intel around. So this is sort of, one could argue, a little bit of a placeholder quarter in that way. That said, though, the company did come out with earnings that were above analyst estimates, revenue above analysts as well. And Gelsinger, who I know you're going to talk to later today, Brian, talked about a chip shortage really being persistent here for the next couple of years.
Yeah, no real change per se, Julie, in the tone of when that chip shortage might end compared to the last time I talked to Gelsinger about a month ago, who at the time said it could last for almost 2 years. So I think a lot of these companies, automakers, you name it, are going to have to get used to the fact that they're going to have to pay higher prices for chips if they can even get them. But two concerns here, I think, on Intel, and that's why you're seeing the stock down about close to 4% here in the pre-market. One is the profit margins for Intel down about 610 basis points year over year. It continues to be a concern on the street. How much market share is Intel losing to the likes of an AMD and an NVIDIA? So that's concern number one. Number two, data center sales. Data center sales were down 20% year over year in the quarter. That's Intel's most profitable line of business. So you put those two together here, and I think that's why you're seeing investors take profits. But overall, it was a pretty good earnings call for Gelsinger. He reiterated that, hey, we're going full steam ahead to build out our chip making capacity, and this is what we're doing. Get on board or get out.
Yeah, so we'll see how all of that works out as the year progresses. Another company that we heard from after the bell was Snap, and Snap is really sort of surprising here. Maybe that it still exists at all, that so many people use it. But also, as we talk about these companies that sort of benefited during the pandemic and what happens next, Snap still continues to see pretty rapid growth and expects to continue to see that growth. The company predicting year-over-year revenue growth of 80 to 85% in the second quarter, which would be an acceleration from the first quarter. They're also talking about a smaller loss than is estimated. They broke even last quarter. They're talking about being cash flow positive. Myles Udland, I think part of our surprise over Snap has to do with the cohort that uses Snap. But nonetheless, the fact that financially they seem to be improving also might be a surprise.
Yeah, we don't need to boomer pill ourselves too hard talking about who uses Snap anymore. I think the thing for Snap, and I use them as an example on this talking point of mine, which users have probably heard. People might be rolling their eyes. It's fine, but ultimately, Snap's success over the last couple of years, I think, is a great example of when you have a really talented CEO with a good vision, and then that CEO has some discipline instilled upon them by financial markets, you start to see a company executing at a really high level. And that's really been the Snap story after a pretty dicey couple of years there after their initial public debut. This stock was, remember, in the single digits less than 2 years ago. And here we see it at about $60 per share. And the thing with Snap that they've the story they've told so successfully and which remains true in their business is it's still a top line story. The company is still growing its users. It's still growing its revenue. And we can start worrying about what you do with, free cash flow. And obviously, first time they're free cash flow positive and all of a sudden, they're bringing in $126 million worth of free cash flow. So I'm not sure that, or I know that that's not going to be a sustainable path for them, in the next few quarters. But if you continue to grow your top line as a growing business, and I think maybe whether it was inside Snap or the investor base, they saw the company's public debut as in the end point on some kind of a journey. All right, let's start turning this into profits, into shareholder returns. But that's not the phase of life that Snap was in, and it's not the phase of life they remain in. As you mentioned, Julie, revenue growth looking 80% this year. That is still a growing business that is bringing in new users at a faster clip than expected. And, if the existing social network structure, you got Facebook and Twitter, right? If you can continue to, kind of portend a future in which you look more like Facebook than you look like Twitter, I think it's going to remain a story that investors, continue to be excited about. And it's certainly been an interesting one to track over the last few years.
And Myles, very important number you tossed out there, $126 million in free cash flow. There were several other bullish numbers or positive numbers in this report. You had daily user growth of 22%. That's at multi-year highs. You had revenue growth 66%. That accelerated from the fourth quarter, and the company's average revenue per user, or ARPU, as they call it on the street, that was up 35.6% year over year. So whatever Snap is doing right now, they're showing investors that they can monetize this stuff, and I think that's why you're seeing the market like it.
Let's move to another area here. Amex, American Express, out with its numbers this morning. And as you can see, their revenue missing estimates, revenue falling year over year about 12%, even as earnings beat estimates. It seems like the biggest shortfall, or the entire shortfall really, in the revenue number came from travel and entertainment, because the company said excluding those areas, volume was up 11% in the first quarter. So that seems to be a big issue for them. But, you think of Amex also, or at least I think of Amex as really a primary business card, right? A corporate card for people. And so you would have to think that that would continue to be an issue for them too, Myles.
Yeah, and look, I mean, obviously, it's not fair to compare an Amex to, what's happening over at, Visa, MasterCard, or some of these other purer consumer spending type plays. And, shares of Amex have benefited to a decent extent over the last year with kind of that consumer coming back, kind of reopening trade. But Julie, not only do they have such a large corporate business, as you mentioned, just think about their member base. It is going to skew wealthier, and if we've seen anything in the pandemic, you are going to have more saving from people at the higher end of the income scale. I mean, this is just, basic marginal propensity to consume, right? We've seen stimulus checks go out the door, and we have seen stimulus checks feed right back into the economy. The core Amex member is not really getting a stimulus check, and a core Amex member is spending their rewards, which is really, the reason for having the card in the first place. They're using their rewards to go travel. And that's not something that's, able to happen right now. I mean, I think about myself with a Delta Amex, I'm canceling it. Why do I need to pay for a credit card for an airline that I'm not really getting on anywhere, regardless of the fact that I moved away from the Delta hub? It's just that kind of the reason for having that within, your wallet has declined, considerably over the last year. And I think the company is likely to, kind of continue dealing with that over the coming years, because again, that value proposition that Amex offers is so clearly about the world as it was in 2018 and 2019. And I think we're still, some ways away from getting back to that.
And Myles, too, on Amex, if you're an Amex investor, you need to look yourself in the mirror today and ask yourself, is what we're seeing in the business community in terms of travel, is it structural? Look what we heard from Chipotle CFO Jack Hartung yesterday. Now, before pre-pandemic, these guys were out there visiting restaurants nonstop. They lived off of a plane. They ate a lot of burritos in the stores. That's what they did. But he told us yesterday in our interview, we're not traveling as much, and we are unlikely to go back to traveling the way we were. Zoom meetings are okay. We can talk to restaurant leaders from inside the restaurant using Zoom. Look at what Southwest told us yesterday when it reported earnings. Business travel continues to lag, and as long as those things stay in place, you're going to see Amex here potentially put up a couple more challenging quarters like the one they put up today.
Yeah, and to Myles's point about travel and the wealthy who might be traveling, they might be doing international travel, but right now international travel is severely constrained in particular. And finally, the great toilet paper boom of 2020. Can we officially call it over, Myles?
I think we can call it over. Here we go. Kimberly-Clark CEO Mike Hsu, first quarter comparisons were impacted by COVID-19 related stock up. There's the TP boom in the year ago period. Consumer tissue category softness. Kind of a rim shot. Yeah, sure. As well as commodity inflation and temporary supply chain disruptions because that storm down in Texas. So really, hitting all the marks here for Kimberly-Clark. You look at the stock of the last year, not a huge surprise to investors that the TP boom is over, but boy, it was some fun while it lasted.
Yes, indeed it was. Although it wasn't fun if you were actually looking for toilet paper in the store or trying to get it delivered to your house. Fun for the company, maybe.